Officer at IndiaMART. He's joining us right now. Dinesh, great to have you with us here. Thank you very much. Let's just take up the revenue growth first. 20% plus after a long time. Will you continue to do this? Is this sustainable?
As I guided earlier, last year...
Mute yourself.
As I guided earlier, last year, our collections from operations were growing at 25 to 30%. And that's how the revenue from operations will also grow. And this particular year, there is a 10 crore plus revenue from operations that has come from the Busy acquisition. If you look like to like on a standalone basis, there is about 18-19% growth. But if you look at Busy acquisition, that is out 24% growth. Now that Busy acquisition is completely done, I think we should be able to maintain this 25% growth in the revenue from operations over the next few quarters.
Okay, interesting. Hi, Mr. Agarwal. Always good speaking with you. But the sense that we're getting is you're prioritizing revenue over margins. Margins have come in that vicinity of around 28 to 29%. We have spoken numerous times in the last few months, and you have told me that, margins could be a little bit subdued in the near term. Have they based out at around 28%, 28.5%? And also, I wanted to get your view on the debate between growth over margins. Go ahead.
Yeah, so if you look at our pre-COVID margins, they were about 25%. And during the COVID, since we did not invest on growth at all, so margins actually shot up to 49%. Offices were also closed. And then two things happened. One, we went back to the normalcy, as well as we started investing in growth in terms of employee addition. However, the employee cost has gone up considerably in the market in the last 3 quarters. And that's how the margins are impacted. In the near term, the margins are going to be in the range of about 28, 29, 30%. And over the period of time, they will start to expand further as we grow the operations further.
Okay. All right. Mr. Agarwal, the other good factor is the paying subscribers. They're up by around 10,000 in this quarter, which is pretty good news. This is high. I think when we last spoke, you were talking about 8 to 9,000 run rate per quarter. You're expecting this now at more than 10,000? Could you give us a number?
So, if you look at previous trend, we used to do about 6,000 subscriber addition per quarter. And now that we have invested in growth, and also there has been a general adoption of internet, and there has been a better acceptance of internet, I believe that 8 to 9,000 should be the new normal. Since we started to invest in growth, immediately the churn has not yet caught up. As the churn will caught up, I believe 8 to 9% is the right guidance.
Okay, all right. So you're not revising that higher then. Okay, 8 to 9,000 odd. Got that. Also, inquiries have dropped. Is not sustainable growth in unique business inquiries crucial to drive the paying subscribers growth? Because that has cooled off a little bit. If I look at it, you've given it in million. Or you'll have to pay more basically to get subscribers. Tell us how this is panning out.
We have not been investing inorganically on acquiring buyers. All our growth has been 100% organic. If you look at our advertising cost, that has been pretty much zero for the last 5-7 years. And from the pre-COVID level to now, I think we are already up by 33% in terms of the unique business inquiries and buyers. We have not been able to monetize that during the COVID period, and now we should be able to monetize. So I'm not worried in terms of 1 or 2% dip here and there. But I think in the long run, yes, you are right that supplier growth and buyer growth has to be grow in tandem.
Got it. Dinesh, just a word on the cash in the books, which was, of course, a topic we touched upon when that modest buyback was announced. Any further thoughts on that?
So last year in February, March, we raised about 1,070 crores net of the expenses were of 1,066 crores. Out of that, if you see, we have already invested 966 crores. So we are left with about 100 crores from there. We continue to do certain follow-on investments on our 10 different investment that we have made, and we'll continue to do that. Now that the cash flow from operations will start to gather up steam, we will come back on the next set of investment ideas over the next year or so.
But Mr. Agarwal, are you talking to a few companies? You know, you had made quite a few acquisitions, Udan. I don't know how the street is reading that, because margins have got diluted a little bit. Your additions are sounding fairly okay. But the street is a little bit worried. They were not satisfied, first of all, with the buyback was too small for them. But inorganic growth, is there something we could hear about in this fiscal itself?
No, I think we have already done two acquisitions, two full acquisitions, one busy and one live keeping. I don't think there is anything on the cards as of now. If something will come up over the next year or so, we'll let you know.
All right, fair enough. We'll leave it there. Thank you very much, Dinesh, for joining us. Good speaking with you, and good luck as far as business goes. IndiaMART is down about, what, 4% or so at this point, 4,096 on the stock price. Markets are stabilizing. I mean, they gave up quite a bit from the day's high.